everyone. My name is Sarah Lanz. I'm the Marketing Director at Cathay Bosch. Thank you to the BBB for having us present to you the top accounting items to consider to create, grow, and protect your small business. I'm excited to have our two professionals with us today to work you through the journey of these items. Today, I'm with Stephen Harrington, a tax supervisor with Cathay Bosch, and Fred Landy, a senior consultant. So without further ado, I'm going to pass it over to Stephen.
Hi, everyone. I'm going to go over some items to consider for your small business's growth and success. They are as follows. First, have a software in place, such as QuickBooks or QuickBooks Online. Don't rely on Excel to track business metrics. When implemented, these software platforms allow for more flexibility as well as better security and cost savings than manual options. They allow you to generate accurate predictions and budgets quickly and with minimal errors. They also provide a cleaner set of records to provide to outside sources such as your accountant. In my experience, having a set of records in QuickBooks gives the accountant the ability to see exactly how the transaction took place and trace if there's an error and see where those entries were recorded, whereas some companies use just Excel, and that can cause numerous problems that can't be traced. As well as manual options such as Excel, you do have the ability to just make an entry error in a formula, and that will throw off the Excel. The second item is utilize a payroll provider. For the minimum fee, this service, whether you are a one-person or 100-person business, can save you a ton of headaches, time, and money. Some owners are surprised to find out how many advantages there are to working with a payroll provider because they feel their operation is too small to realize the benefits. No matter your size, a third-party payroll provider can help you avoid tax and payroll penalties, oversee and keep you up to date on human resources rulings and regulations and compliance matters. Some of the items that they can help you with are the ERC, which Fred will get into later in this program, as well as other legal matters. The other item is this is going to be cheaper than a CPA doing it for you, and we recommend having meetings with the payroll providers before choosing one because they are not all created equal. Two of the top providers in the area are ADP and Paychex. We would recommend that you reach out to a representative and have a meeting with them beforehand. Third, have a correct employee benefit and retirement plan in place. You may say, but I offer a 401k plan to my employees, but look closer. Can you make it more advantageous to them? Providing the right benefits will attract and retain the best employees. Don't be afraid to revisit them every couple years. You can work with your benefits administrator to understand if there are better opportunities for your employees and company. You may have to spend a little more, but this outweighs the costs compared to trying to replace an experienced, well-trained employee. Secure Act 2.0 has changed the rules, and we do have a video on our Cathay Bosch website that you can visit to see how Secure Act has impacted the employee benefit and retirement plans. Next, we'll talk about consider outsourcing. Look to outsource operational components of your accounting, HR, IT, or administrative functions. This will provide you time to focus on matters to grow your business and to take you out of the daily grind of running it. After all, you didn't start your company to reconcile bills or install the latest software updates. I found in my experience, especially with small businesses, that the owner tries to do everything. They try to run the business as well as be a part of the business. The reason that you're the owner of the firm is to make money in the firm and help grow it. Let a professional handle the bookkeeping and other administrative functions so that you can spend your time doing what you're good at. Next, invest in cybersecurity items to protect your data. Nowadays, no matter the size of your business, you should make room in the budget for having a cybersecurity person or team in place along with correct cybersecurity insurance. These costs up front will save you large legal and reimbursement costs if your data were to be hacked. There are many different types of software that you can utilize. It just depends on the company. We recommend looking at this on an annual basis, and also please be aware of IRS scams. The IRS will not email or call you demanding payment right away. We are seeing a much larger amount of these scams coming out, and the IRS does release information about it on their website. So if you'd like, please visit the IRS website for more information. Next, plan your succession at least 3 to 5 years prior to retiring. It is always better to have a plan in place in advance than to get where you are ready to sell your business and then discover that the value is not what you had expected, but that it could have been significantly higher if you had planned ahead and done certain things to maximize the value of the business. We recommend working with a CPA and attorney. They will help you know when to start planning, how to build the value of the company, and also understand how to integrate a family member or employee to take over once you decide to exit. And finally, I'd like to talk about tax planning. Please reach out as soon as possible to your accountant. Don't wait until April. There are interest and penalties that can accrue throughout the year for underpayment of taxes. Plus, when some items to consider as you're going through year-end tax planning would be look at any major asset purchases throughout the year, any possible bonus depreciation that can be taken, as well as setting up retirement plans before the end of the year, charitable contributions, double checking to see if there are any small business, minority-owned business credits available. And 2 additional notes are tax refunds. Please note that the government is very behind with processing tax returns. We are seeing upwards of 3 to 4 months to receive tax refunds. So if you do not get that refund within a week to 2 weeks, like the normal time period, please be advised that it could just be taking longer. One other item to keep in mind for year-end tax planning is the PTE deductions that are available to pass-through entities. Please talk to your accountant. This is a new tax item that came out in 2020, and if you file in various states, you might be eligible for this deduction. In closing, please keep in mind to review all of these items on an annual basis. If you do, you'll be able to create, grow, and protect your business for years to come.
Okay, thank you for that, Stephen. I'm going to talk about the employee retention credit today. I'm going to start with a little bit of history about the credit. This is probably going to be a refresher for most of you for at least the first couple of minutes, and then we'll get into the current status of the credit with IRS. So employee retention credit originated as part of the CARES Act in March 2020, along with PPP loans and lots of other forms of pandemic relief. Originally, businesses that got a PPP loan were precluded from claiming ERC, so not much attention was paid to the credit at first because, well, who got a PPP loan? Everybody, right? But at the end of 2020, the Consolidated Appropriations Act passed, which, among other things, allowed businesses that got PPP loans to claim ERC if they otherwise qualified for the credit. So the credit generally exists for quarters 2, 3, and 4 of 2020 and quarters 1, 2, and 3 of 2021. So how do you qualify for the credit? Well, there are 2 ways. One is by way of what they call a significant decline in gross receipts. Well, what does that mean? For 2020, a business needs a greater than 50% decline in gross receipts in any calendar quarter in 2020 compared to the same calendar quarter in 2019. And you need to measure your revenue on the same basis that you use for federal income tax purposes. So if your accrual basis on your federal tax return, you measure your declining gross receipts using the accrual basis. If you're cash for income taxes, you use the cash basis. So if you have a 50% decline in gross receipts in any quarter in 2020 compared to 2019, And normally for 2020, that would have been the second quarter because that's when the pandemic really hit and there were shutdowns and all that. But if you have a 50% decline in gross receipts in any quarter in 2020 compared to 2019, that quarter becomes an eligible quarter for ERC, as well as each subsequent calendar quarter in 2020, up to and including the first quarter in which your gross receipts exceed 80% of the same quarter in 2019. And for 2021, any quarter, and remember, we're talking about quarters 1, 2, and 3 only in 2021, any quarter in which you have a more than 20% decline in revenue compared to the same quarter in 2019 is an eligible quarter. And if you have a quarter in which you don't have a 20% decline, you can look back to the previous quarter, and if that quarter has a more than 20% decline, you can use that quarter to qualify for the current quarter. Okay. The amount of the credit is significant. For 2020, the credit is 50% of wages paid in eligible quarters, up to $10,000 in wages per person for the year. So the maximum credit for 2020 is $5,000 per person, 50% of a maximum of $10,000 in wages. For 2021, the credit is 70% of wages paid in eligible quarters, up to $10,000 per person per quarter. So the maximum credit is $7,000 per person per quarter for quarters 1, 2, and 3 in 2021. Okay, I don't want to spend a lot of time on how to qualify for ERC by way of a significant decline in gross receipts, because I feel like virtually every company who qualified for ERC by that method has already filed for it. If you think you qualify that way and you haven't filed, please give us a call. Qualifying by way of a decline in gross receipts is easily documented, and it's black and white. You either had the decline or you didn't. The other way to qualify for ERC is by way of government restrictions on your business. This is a gray area that's being exploited by many companies by telling businesses that they qualify for ERC when in fact they may not. So you've probably heard ads on the radio or been contacted directly by companies who claim they can get your business up to $26,000 per employee for ERC, even without a decline in gross receipts. Well, just because Phil Dunphy from Modern Family or Mr. Wonderful from Shark Tank tells you that you qualify, you really may not. In fact, the IRS on September 14th, 2023, placed a moratorium on ERC claims because they said that 95% of the claims being filed at that time were fraudulent. But despite the moratorium, you should still file a claim for ERC if you do, in fact, qualify. So there are deadlines for filing these claims. For 2020 credits, the deadline is April 15th, 2024. And for 2021 claims, the deadline is April 15th, 2025. And of course, you file these claims by amending your payroll tax return Form 941 to claim the credit on eligible wages paid. So IRS is really scrutinizing these claims now, and it may take 6 months or more to process a claim. When the moratorium came out, IRS said that it was on new claims only, but I haven't seen any claims that were filed prior to the moratorium processed in the last 3 months since the moratorium was issued. So just if you do file a claim or if you have filed a claim, just be patient, and you can call IRS to find out the status of your claim, but I've called recently, and the best that I've gotten is, yep, that claim is in process. We don't have a date for wrapping it up. So not very helpful. So please be careful. If you hear from a company that you've never heard of claiming that you qualify for ERC, be sure to check with your trusted tax advisor before filing a claim. These companies usually charge a fee of 15 to 20% of the credit. But the concern is that if your claim gets audited, say 2, 3, 4 years from now, IRS may determine that you really didn't qualify, and you may have to pay back the credit that you received, plus penalties, plus interest, and good luck getting your 20% fee back from whoever did the calculations. So just be really careful with these companies that claim they can get you big money. Both the IRS and the American Institute of CPAs have issued warnings about working with these companies to claim ERC. Both have issued short, plain language resources for understanding the credit and how to legitimately qualify. Next slide, please. So the AICPA issued Employee Retention Credit Fact or Fiction, and IRS has issued an ERC eligibility checklist to help people understand how to qualify. These resources were sent to all of you with the link to this webinar, so you have them. If you have any questions about employee retention credit, please give us a call and we will help walk you through the process to help you determine if you really do qualify. Thank you.
Thank you, Fred, and thank you, Stephen, for your information. We greatly appreciate your time on these matters. If anyone does have further questions, please feel free to email or contact Fred or Stephen in regards to your matters, and we'll do the best we can. But again, thank you for joining our webinar, and we hope you have a great day. Thank you.